One of the most important things that I look for in leaders and a quality I look for in leaders is discernment. Like, investigate, ask questions, do your due diligence. The people that have been at a company that's went out of business for 5 times, they buried their head in the sand. They're not true leaders. And they need to either step up and change or they won't be successful at freedom.
This is the Solar Disruption Theory.
Welcome to another episode of the Solar Disruption Theory podcast. My name is Chad Towner, and today we've got back in the studio with us Brett Bouchy, the CEO of Freedom Forever. Brett, it's been a while. How you been?
It's been good. I feel like I've aged about 2 years since the last time we did a podcast. It was probably a month or two ago.
Well, you seem very charged up, and apparently there's this new thing called nitros. Is that something is that what's gotten you through the last couple months?
It has, but I would not advocate for it because they have like 260 milligrams of caffeine per nitro. And so that's about 3 times a normal cup of coffee, but that's what gets me going later in the afternoon.
Well, it's good to have you, and let's just get right into it. It's been a while. A lot has happened since we last spoke. What in the heck is going on with solar in the winter of 2024/2025?
I would say it just continues the last couple of years since 2022 as we've shifted from loans to PPA. It just continues to get more challenging. And probably the last 60 to 90 days have been probably the most challenging from a capital market standpoint. We had the uncertainty of the election. It's not only that we had a transition from pro-clean energy like Democrats to, quasi-clean energy Republicans. No one dreamt that you would have the House, the Senate, and the presidency going to the Republicans. And that typically does not happen. And to have that happen is just create a lot of uncertainty around domestic content, the Inflation Reduction Act, will it be rolled back? And we are in an industry that needs certainty. We depend on the capital markets. 94% of all of our customers use some type of financing. So the worst possible thing that can happen to our industry is to create more uncertainty, but that's exactly what's happened over the last 60 to 90 days.
So would you say that's largely caused by the results of the election, or that's just one piece that's kind of been added on to this already building environment that we're currently in?
Yeah, it's the cherry on top, whatever cliche you want to use. It's just, we've talked so much about what has happened to get us to this point. But today we need stable finance partners, and finance partners need certainty. And you need to know the Inflation Reduction is going to be around for a period of time. Domestic content, since we talked, how you get to domestic content has changed. So,
right.
And right now, the domestic content adder is intact. We expect it to stay intact, but there's no guarantees. So when you're trying to go out and search for capital partners, they want certainty that there's a runway on domestic content in the Inflation Reduction Act for a year, 2 years, 3 years, 4 years, which we had prior to the election. And now that we don't, it just has created a lot of uncertainty, and you have people standing on the sidelines, and that has created, more struggles from within our industry.
So let's talk about that, the Inflation Reduction Act, and specifically domestic content. You're right. The last time you were in the studio, that was largely what we focused on, right? And we were buying domestic content, and we were starting to install domestic content, and there was all this excitement around what this could mean. U.S. manufacturing ramping up again. What do we know is still kind of certain? Do we know anything for certain right now, or is everything back up in the air around the domestic content?
All right. So in the short term, we know that domestic content is going to be around to at least until September.
Okay.
All right. But if you asked me on the last podcast, I would said, we have certainty for the next 6 or 7 years.
Jeez.
That's how much it has changed. Now, do I believe in what the Republicans will do. When you actually think about what's happened with the increase in manufacturing around domestic content, it has almost happened exclusively in red states.
Yeah.
In Texas, in South Carolina, in Nevada, like all of these big manufacturing plants were strategically put in red states.
Georgia too, right?
Yeah. Georgia, massive Q-cell plant.
Yep.
They're doing cells, eventually wafers there. So those are the types of things that are great for our industry. And we don't think that there is going to be a repeal. The chance of it being repealed, the Inflation Reduction Act in September, to us is very, very slim.
Okay.
But
that's good.
Capital markets don't like super majority. They want certainty.
Right.
They don't want to be 99.9% sure. They need to be 100% sure. When you're committing hundreds of millions of dollars or $1 billion of capital for a year, you need to know if that's going to be utilized. And they just don't know right now, which has just created higher advance rates. And an advance rate is how much somebody would loan against a particular set of assets. And you have companies that are out there that have assets on their balance sheet, finance companies that thought that they had this easy financing that they could get. And all of a sudden, the world is turned upside down and you might be able to only borrow X amount for it or sell those assets for 70% of what they were overnight. And that has created a lot of strain. And it's public knowledge that we've had 2 finance companies that have been behind in paying their installers to the tune of hundreds of millions of dollars. When you take, $100 million, you take 10 million out of the ecosystem for installation companies, that creates strife. And, we have benefited from the uncertainty out there because we have the perception that we are stable, but everyone is affected by this, including freedom. No one is exempt from this. So those are the things that we are all having to deal with as an industry. Nothing's changed. Like the thing that's changed probably the most since the last podcast is the consolidation is going to happen much faster than I anticipated even 2 to 3 months ago. So that is an absolute certainty. You have to figure out a way. I talked about having to reduce your costs by 70 to 80 cents to stay in the game and to be able to compete and scale with us. Now you also have the ability to have higher cash yields. All right. And that is something that is different than what it was 30, 60, 90 days. Like, finance partners are finding ways to either not pay on difficult projects or pay later in the process. And so that creates strain on the smaller installation companies. And that creates more strain on the already strained, like they were at wit's end. And for this to happen is catastrophic for a lot of them. And a lot of people think, oh, we're at the end of the cycle. They don't know what they're talking about. Like the cycle, we're at the tail end of the cycle, but we have at least a couple of quarters of pain moving forward.
Okay, so I want to break that down. You use the word consolidation, and you're referring to a lot of other smaller companies that are under stress or going out of business. I mean, we had Justin Wolf, CEO of Meraki, on the podcast about a month ago, and he was talking about, the decision he made to just join forces with Freedom. But what do you mean by consolidation? What are you seeing in the marketplace, and why is the consolidation accelerating?
Because it was really hard to compete with Freedom from a margin perspective. Now to try to compete with it with additional cash flow challenges that didn't exist a couple months ago are just going to accelerate people getting out of the business. And, we're seeing that on a daily basis. We have people coming to us because they just can't figure out a way to get paid from their partners. And it's not even the fault of the installers, this one. All right. I could argue that their lack of vision, they They thought that they could operate on a small scale. They didn't think the national scale construction company would work. That was a lack of vision, not seen, because it was so obvious what has been coming from Freedom in the last 5 years. This is just unfortunate. This is not their fault. This is extraordinary circumstances that will get better. I just can't tell you if it's going to get better next month or third quarter of 2025. But in the meantime, that is going to be the final straw. That is going to be the fatal blow for a lot of these companies that have been hanging on. And there's a lot of them out there.
And that's another term that you've started to use, I've started to hear more recently, is cash yield. So what do you mean by cash yield, and why is that a term that you're starting to use so much more often?
Because, one of the keys is how you get paid. So even domestic content. So a company like us, we have been very open talking about, we get domestic content rebates based on us installing those rebates. They're a significant amount. It's how we were able to reduce our costs back a few months ago. We lowered our baselines, but we are getting those rebates a lot of times 30, 60 days, 90 days after PTO. So essentially, you have a certain amount, a dollar amount of your project that was about 10% that's paid at PTO. You're actually now having 10% paid at PTO and another 5 to 10% paid 30, 60, 90 days after PTO. So our margin is increasing significantly, but the cash flow is moved to the back end of a project. That's what we talk about cash yield. And so if you're getting less on the front end of a project, that is reducing your cash yield. And they're very, very different. You can be very profitable in this industry from a GAAP standpoint. And from a GAAP standpoint, that is just means general accepted accounting principles. But you can be very profitable and be cash flow negative. Right. You can be cash flow neutral. You can have a small margin. You can operate at a 20% EBITDA margin, but only generate 1% cash. Yeah. That's how much it's changed, where before you could operate at 20% EBITDA, but your cash could be even better because the finance companies were paying so much from a pre-install standpoint. Yeah, like the M1s have pretty much gone away for most of the industry, right? Like it's not a thing people talk a lot about anymore. The money has kind of shifted toward the end, which, is more safe and secure for the finance companies, the investors, takeout partners. But for the small to medium sized installer, it's causing this massive cash crunch, and it's putting companies who probably otherwise wouldn't be going out of business, putting them under. There is companies that are operating that are profitable that go out of business because they can't generate the cash. Yeah. So that's the unfortunate part of what is going on today. And, but we didn't create this situation, and, our goal is just to grind, keep our head down and just consolidate and just get bigger. But I do believe we are now looking at another year of contraction, which I would have said 3 months ago that I was expecting modest single-digit growth. Now, definitely going to be negative in 2025. But the more negative, if we end up down 20%, I think we might triple our market share in 25 because of it. So although the solar industry may shrink by double digits, Freedom may triple its market share. Correct. So, and that's what we've been doing, is that we grew last year in a year of contraction. There was significant contraction. The numbers are still not out. It's going to be somewhere probably between 12 to 20% down. We'll see when the number comes out, but it is really hard. One of the things that is very frustrating in this industry, it's very, very opaque. Even the projections that are made on residential solar or the final numbers, they're estimates, and they're triangulating PTO data, permit data, a lot of the different data, but it's going to be a rough year. And it's the first year in the history of residential solar where you've seen contraction, and we're going to have 2 years of it going forward. Now, if we do get clarity and we get certainty, which is something that I don't see in the immediate future, that will help a lot. And if that happened in April, you could see the second half of the year with some modest growth. The other thing that we're starting to see now is the risk of tariffs. So we're already starting to see equipment pricing going up. So if you're within the industry and you start hearing from your installers that red lines are going up, that is correct. I'm just letting everybody know the cost of equipment is going up because of the tariff risk. And it doesn't matter if the tariffs, just the threat of tariffs, make the cost go up. So much of this is macroeconomic supply and demand and just the threat of potential tariffs. It doesn't actually have to be tariffs. Create havoc in the marketplace. So the first thing that happened, we've already seen 3 price increases in modules since the election.
Yeah, and you mentioned the certainty. What specifically are you looking for in terms of certainty? The domestic content, but is it strictly around the IRA, domestic content, the political aspect of where renewable energy falls within this administration, or are there other things? Like, is interest rates still a big factor in this? Like, what other things can help solidify and create more certainty for the decision makers in this business?
Interest rates are certainly a factor, but we need the certainty on the Inflation Reduction Act.
Got it.
And so let's rewind on that. We have the Inflation Reduction Act. We get 30% of an ITC tax credit for everything, for purchases and PPAs. But on PPAs and leases, you get additional tax credits. You get 10% for domestic content, you get 10% for low income, and you get 10% for energy communities. Right now, we need certainty on those 3 additional adders. The one that everyone says is not going away. When I say everyone, that's speculation. It's everybody's opinion. But there is a consensus opinion that the domestic content adder is going to stay in place because it's brought so much manufacturing to the U.S. Now, will low income, will energy communities go away? We don't know, but it's really hard to plan. And so we have, there's one financing partner that is trying to create a new product, and they're out in the capital markets trying to do that. You having to try to come up, all right, and essentially have somebody allocate $1 billion of capital for this product, but we don't know what additional adders you're going to be able to get.
How do you price that?
Yeah. And so that is one of the challenges that is unique today. And I've never seen it like this in the almost 10 years I have been doing this.
So assuming everything somewhat normalizes or stabilizes, or basically assuming nothing else crazy comes down the road, at least in 2025, you're still expecting the industry to shrink modestly, Freedom to grow significantly. How can Freedom handle and account for all of that growth and new volume that's coming from all these different directions?
Well, new volume is very easy for us to handle. We've talked about that at length with our software. We've got 57 branches in 36 states. We are built for more volume. It's actually the opposite. When volume goes down, it's bad for a large size company that has a lot of fixed costs like Freedom. That's the biggest risk. That's why we've created the alignment. That's why it's so important that 94% of our sales come from our 3 partners that we have an equity relationship with. That's why, and we're the only installation company that has anything like that. And we have a stickiness, and we don't have the transient nature of people leaving and going to other companies that plagues everyone else. A lot of people will say in 24 and 23, the number one reason that installers went out of business was because of them not getting paid by their finance companies. That's actually incorrect. All right. the number one reason is because of the transient nature in large sales groups moving from one installer to the other and putting that one out of business. The second issue was the finance companies. And so we recognized that, and we talked a lot about it. Like, we didn't take on door to door until 2019. And we've talked a lot about the evolution of freedom and how we realized that door to door is incredible. The flaw in door to door was the transient nature of it, the cyclical nature of it. And we had to solve that. And we had to come up with deeper partnerships that no one had thought about. That was the key to having the stability to continue to grow and add employees. We have approximately 4,000 employees. We need stable business. We cannot see our sales companies leaving and going to other installers. That is devastating to an installation company. And we've tried to create alignment where that just doesn't happen at Freedom. And that's one of the reasons for our successes.
Yeah. And it's not just, the certainty of them being around and not leaving, but it's the exclusivity. We're getting all of the volume from them versus a lot of the models still out there where they're, sending volume wherever they want to, depending on who's installing the fastest. So I definitely think that has played a big part. But with these leaders, a lot of them, they're coming to us and they're telling us like, hey, I'm almost ready to leave the industry. I'm like going through all these different challenges. I've had all this bad luck. This company couldn't pay me. That company went out of business, et cetera, et cetera. What is your message to those people? Because we're starting to see a lot of those guys coming in and joining Freedom eventually, or looking at Freedom. And you have this conversation with them. What does that conversation look like?
It's not a fun conversation. Like, it is very frustrating when people say that. The economics haven't changed. We're in an industry where we can save people money 90% of the time within our industry. It's incredible. Only 4% of the homes have solar. 96% of homes do not have them. 24 out of 25 homes do not have solar on them. It's just that it's gotten a little bit harder. The payment timelines have gotten longer. All right. So yes, do you have to tell new people to come into the business to budget their money for 4 to 6 to 8 weeks better and not run out of cash? Absolutely. Do you need to set the proper expectations? But what I don't like is when people come up and they go, man, I've just had a string of bad luck. I've been with 5 installation companies and they've all went out of business. So one of the things that is frustrating to me is that one of the most important things that I look for in leaders and a quality I look for in leaders is discernment. Like, investigate, ask questions, do your due diligence. The people that have been at a company that's went out of business for 5 times, they buried their head in the sand. They're not true leaders, and they need to either step up and change or they won't be successful at Freedom. I don't subscribe to the fact that you can have that bad of luck. All right. So we've been out for a long period of time. Why did you choose those companies? We know there's 2 financing companies that have not been able to pay people, but there's people out there still selling their product. All right.
Yeah.
And like, then they're going to go, is that bad luck or is that bad discernment? All right. And like, that's what people need to do. And if they are looking to get out of the business, it's not because of bad luck. It's because of their lack of leadership. And if you're going to bury your head in the sand as a rep, you can do that when it comes to your own money. But what makes me so angry is that they're supposed to be leaders of men and women out there.
Yeah.
And they are supposed to be making decisions for them. And you have people that follow you, depend on you and your discernment. And if you don't have that discernment, if you bury your head in the sand, like, you're not a great leader and you will fail. And people will leave you because of the bad decisions that you make. And so many times people ignore all of the red flags that are out there.
Yeah.
And they just keep going. Well, I just had faith. Like, it's shocking when SunPower went down. How many people were still at SunPower? Like, how many red flags? Like I feel like somebody was coming out in the traffic with like a 80-foot flag, waving it like you see at the college football games.
Yeah.
And yet they weren't paying attention. And they had lost some people, but I was shocked at how many people stayed until the end.
Yeah.
And that's it. Like, you have two paths, all right? And if you're going to go down this road as a leader, you're literally walking everybody off a cliff. Make the right decision as a leader, all right? And there is no bad luck, all right? You make your own luck, all right? And there's a right decision and a wrong decision, all right? And if a company, like a finance company, got behind paying you and they couldn't pay you for 3 or 4 weeks, why are you still selling their product? I mean, I'm reiterating what I just said, but it's mind-boggling that it's still going on today, and people forget about that when there's 5 companies that have never missed a payment, all right? Why aren't you selling those? Because the EPC is slightly better, because of this, because of that. Figure out a way to sell a product that you know, like, we know the 2 finance companies that are in trouble. Stay away from them until they stabilize.
Yeah, what good is a high EPC if the check never comes?
Correct. And it's not even that. Sometimes they don't even have the highest EPC. They're just used to selling it.
Right. That's even worse.
That is the epitome of a weak leader.
The other thing that I've seen, and we're not 100% immune to this either, is like sales reps who just, deal with adversity, things get hard, it gets frustrating, and they decide they're going to just leave solar and go back and, start driving for Uber or, go be a waiter again or whatever it was, or even go and sell some other product door to door. What is your message to those people? Because, they've experienced the frustration, the challenges that come with solar, but it seems like they're making a long-term decision based on short-term problems.
My answer is stop being a pussy.
Okay. It's good answer, Brett.
I mean that. Like, can't you, like, I have 5 boys. Like, do you not know how to do a budget? Do you not know how to budget your money? Like, when you go into this, like, cycle times to get paid might be 8, 12, 16 weeks. A lot of times these guys are going from a $5,000 commission to a $400 commission with another industry. And because they can get paid faster, like, I don't feel sorry for them. Get out of the business if you can't budget your money. And I know there's a lot of young people that are out there. Like, I was young, but my parents taught me correctly, like, you budget your money. All right, if you go into it, it's 1099 and you have the expectation that you might not see a check for 10 to 12 weeks, which I did. I became a 1099 stockbroker, and I went in thinking, hey, I might not get a paycheck for 6 months. I kept my expenses down, all right? I knew what I had in my bank, and I knew I could make it several months without a paycheck. And guess what? Because I didn't have that fear and anxiety, I got my first paycheck at about 7 weeks. And I've never made more money in my entire life. But how many people didn't make that? Because again, they didn't make the right decisions. So I'm not trying to be calloused, but let those people go back to pest or, other door-to-door products. Like, this is the gold. Like, this is the highest of the high in door-to-door. In fact, I hate when people refer to themselves as door-to-door. Once you find solar and you have success, you should not be thinking about any other products. There is nothing like this. Is it more complex? Do you have to learn about construction? Do you need to know what a main panel upgrade is? Do you know how to look at a roof? Be a professional, learn those things, and spend the next 10 years accumulating wealth that you can't in any other door-to-door industry. If you're not willing to make those sacrifices, leave the industry.
Yeah, there are huge benefits to that discipline. And I think, this refining process that is existing right now, I think we're feeling it too at Freedom. Like, this has caused us to have to really dig deep and look at ourselves, look at our business and say, how do we get better? How do we eliminate this potential risk or avoid this mistake? I feel like there were blind spots in our business we didn't know that we had until this past winter, but it helped me understand a little bit about where Freedom is operationally and just in terms of our data and our ability to really understand our business at the level we do today had we not gone through this. Because I think it's similar to a sales rep. They need to discipline, they need to budget, they just need to get better and level up at what they do. And I think Freedom has gone through a very similar experience.
One example is on 1 out of 100 projects, about 1% of your total projects, you struggle to figure out a pathway to get to PTO, even at Freedom. Now, that doesn't sound like a lot, but when you talk about hundreds of thousands of projects, we've gotten a lot better this winter on focusing on those. How do you figure out how to get those things over the finish line? And there's a lot of really complex projects.
Yeah.
You know, we had somebody go into the military and disappeared. We already did the install. We couldn't get a hold of the customer for 2 years. And all of a sudden he resurfaced and he came back from, I think it was Iraq that he was in, and we finished the install. But in that project got clawed back. A lot of people hear claw back and they hear like a negative word because they're looking at reps that get clawed back. But installers get clawed back. If you can't get to PTO in a certain period of time, you get clawed back all of the money that you've been paid. All right, this sounds calloused and crazy. What happens when a customer dies between install and PTO? At our scale, that happens every month. All right, so like it's just a statistical number. Like there's going to be people that pass away in that period. Most of the PPA companies, like you are forced as the installer to pay back that money. Now, we've worked really hard with our newer relationships to not have that happen. There should be shared responsibility, but how do we deal with those? Yeah. And historically, the installer takes that. I mean, that's insane. If you're doing a kitchen cabinet and the homeowner dies, do you not get paid? No, you finish it and you get paid.
Right.
It's ridiculous. And there's all these like fringe examples.
Yeah.
So you can have a permit on a project and all of a sudden you're going for inspection and you're in like a rural area, and then 15 miles away on their property, they have an unpermitted structure that no one knew about. And the county issued the AHJ issued the permit, yet the inspector won't pass it. You've got to get that thing permitted. What happens if the customer doesn't want to do that? Those are the types of things. Right. And when you talk about 1% of $2 billion, it's a lot of money.
Yeah.
Those are the types of things that we've been refined and we've had to get better at. And we have to get that number from 1% down to 0.3%. And so those are the things that we've been looking at this winter that is, I think, really helped us. And, you know, it's the iron sharpened iron, like biblical reference. I think we've gotten better through the challenges that presented ourselves in 2024.
Yeah, I mean, in that example, that's $20 million worth of projects. But on top of that there's a customer service aspect that I think we've really been able to focus on and deliver and provide solutions to projects that were otherwise incredibly tricky and give customers a favorable outcome, which has been like, you know, it's just overall been really, really good for our business. But we would not have focused on that bucket of projects had we not essentially been forced to say, hey, where are the projects that we still need to get funded on, right?
And service is such a big part of our future from a revenue standpoint. Like we know as we consolidate, there's going to be a lot of these companies that are going by the wayside. One of the biggest problems right now is orphan projects. We are coming up with a solution where we can go and fix those projects. Another thing is you have a lot of these third parties that are out there that are being used by the PPA companies that they don't have the infrastructure to service them. They just hire like solar installers throughout the country to build a network to fix the projects. And they're like a backstop if the finance company has their solar installer go out of business, then these companies step in and pick up the service. These companies that pick up the service do not have the infrastructure to do that. We have hundreds of service techs that can do it in 36 states. We are the future of the service industry. We already have it. It's going to cost us the least. And I talk about inefficiency. And right now, those third-party servicers are charging the PPA companies a lot of money. We can do it at a fraction of the cost. That's something on a roadmap in 25 and 26 that we're going to eliminate that inefficiency, just like we've eliminated other inefficiencies. But it's going to just give us a further competitive advantage over everyone else out in the industry.
Yeah, I think, and when you say orphan projects, that's a project where customers either installed, not PTO'd, or even if they're PTO, but they need service, but the company who did all that work is no longer in business. So they've just kind of been abandoned and there's nobody for them to turn to.
Yeah, and no one wants to pay to fix their service because they thought they had a warranty on it. And even if they are willing to, you have to take on the liability of stepping on that project when you don't know what the quality of the construction is. And if you step on the roof and they installed and had bad roof penetrations, then the liability shifts to you. There's not an easy solution. And so we are working with the finance companies to come up with a better solution because it's a big problem. And you're seeing default rates. And we talk about uncertainty. One of the other uncertainties is we're starting to see, because of all of the struggles and the installation failures of 23 and 24 and the first month of 25, you're starting to see higher default rates creep up. Higher default rates mean less money the capital partners are willing. And there also is this a trend? Is the number went up by 10%. Is it going to continue to go up because more of these failures and as more of these construction projects mature? Because the reality is most roof penetration issues you have come in years 6 through 25, not in the first couple of years. So this is going to continue to manifest and become a bigger problem. We are going to be the solution to the problem.
All right. So in 2025, you're expecting big growth. It feels like we're kind of primed. We've gone through a lot of adversity. I think the industry has. I've only seen you work harder. You're showing up at the office before the sun's up now. You're playing a lot less pickleball, but you've just been grinding, as you said. I've never seen anything like it. But at the end, I know you believe that we're just going to come out that much stronger and we're going to continue to consolidate the marketplace. And so I guess, all the stuff that Freedom has gone through that you've had to essentially help the company to refine and get better at, it hasn't been easy. We have difficult conversations with small business owners. It's sad. Some of these people are coming to us in tears. So I guess, do you have any regrets about getting into the solar installation business? Because this is by far the hardest thing that is in the chain of solar. So what are your overall thoughts looking back? You got here 10 years, you've been doing this 10 years. I think it's, the last 12 months have been probably the hardest. Would you say?
Yeah. So first of all, I've never done anything for 10 years. If you know my background, it's in private equity. I was typically in and out of a company within 2 to 3 years. So to me, this is very, very different. The last year has been the most challenging year of my business career. With that being said, it's also the most fulfilling. I love it. I love challenges. And to me, this just, it's like I play Sudoku. I don't start on the easy ones. I go to the challenger ones, not the hard ones. I go to the most difficult ones. And this is a difficult problem to solve. The more difficult it is, the more fulfilling it is to solve and to find solutions. And you have to be creative and you have to be unique. And I've never experienced an industry with so many ups and downs. And I remember the first 5 years, I hated when people used the word solar coaster. That's truly what it's been the last couple of years. I think that has so many negative connotations. And my goal is that 10 years from now, we'll laugh back when we use the term solar coaster, but it is that's what's happened in the last year specifically. But no, I would not change anything. And I've said to my wife and my kids, my legacy is always going to be them, but this will be my business legacy. And I've never been so proud to see everybody kind of come together, galvanize, and just lock arms and find solutions. It has been amazing. And the sense of fulfillment that I have every day is so incredible. I feel just so blessed to be a part of this.
Well, we appreciate you, Brett. I know you've been grinding. I've never seen anybody handle risk and stress the way that you have. What's the analogy that you typically use in baseball? Are we trying to hit a single or a triple?
No, I mean, if we're playing in Fenway Park, we're trying to hit it over the green monster, but out of the stadium. There is nothing else. There is no single. A double is a failure. Like, to truly have the societal impact that we want to have here at Freedom, we've got to be disruptive. We have to challenge the sense of what is normal, and we have to stretch the boundaries of thought of everything that we can do. And we've got to get this industry to 50% of the homes having solar. And we're going to accelerate that. And we are not going fast enough. It's the criticism I constantly levy on Freedom and myself, is that we're not going fast enough. I'll have conversations with our CTO and they're like, well, what should we build? Build it all. All right. We can't just build this. We've got to do it all. Hire whoever we need to. Full send. That's what we're doing. We have to accelerate the rate of residential solar adoption, and we have to do it now.
His name is Brett Bouchy. He is the CEO of Freedom Forever, a visionary leader, and he is atop the solar industry for good reason. Thank you so much for joining, Brett, and we will see you guys on the next episode.
Thank you.